And if the euro does fall to 90 cents, as we think it will, you could walk away with as much as 574% pre-commission profit.
So Britain could leave the European Union, they may not, but if they do, it's a very, very big problem.
Hello, and welcome to episode 2 of our 3-part series, 3 Shocking Forecasts for 2016. I'm Mike Larson, editor of Weiss Research's flagship newsletter, The Safe Money Report. Our special guests today are 2 of America's leading global investment strategists, Boris Schlossberg and Kathy Lien. Today, we will examine Kathy and Boris's second major forecast for the year ahead, an economic catastrophe overseas with the power to make alert U.S. investors like you very wealthy. Welcome, Boris. Welcome, Kathy.
Great to be with you, Mike.
Thank you for having us.
I know you're here today to share your second great forecast for 2016 with our audience here, so I wanted to maybe just hand you the floor and help you start out there and tell us what you see going on.
Well, our forecast for 2016, the second forecast that we're going to do, is the disintegration and the political fragmentation of Europe. We really think there's going to be massive problems in that region for essentially 3 reasons. The region is fragmenting politically, it is dying economically, and the wild card of all, there is under a massive threat of terrorism because of the influx of refugees that's coming into the Eurozone.
Absolutely. Let's go through those points one by one and maybe talk about the political side of this first. What do you see happening there?
So let's start with one of the biggest stories that we've had in the past couple of years, which is Brexit, Greece's potential exit from the Eurozone. Now, that story kind of faded at the end of 2015, but we think it's going to come roaring back this year and next. This will be the 5th year in a row that we think the markets will be talking about Brexit, which is nothing more than a festering wound. But the real problem here is that due to the fact that we're hearing about it so often, you're getting fatigue from voters who are turning much more inward versus outward. Mm-hmm. And we don't think there may be any political will left in the Eurozone to save Greece.
Yeah, there really isn't any political will to save Greece at this point, because remember, in the years prior, Greece was really the only story in the Eurozone. But now, with the threat of terrorism, with the threat of fragmentation, nobody's really going to pay that much attention to Greece, which means that there's going to be zero will amongst the electorate to want to try to rescue it again. And we know very well that given the situation as they've negotiated, Greece is simply not going to be able to make the payments that they're going to need in order to get themselves back to health.
You know, but the real issue is that it's not just a question of Grexit, really. It's also this issue of Brexit. So I was wondering if you could tell our viewers a little bit about what that term means and what the implications are there.
So Brexit basically pertains to Britain's potential exit from the European Union. And the reason why this is such a big story is because the vote could happen at the end of this year. And certain recent polls show that the yes and no are neck to neck. So Britain could leave the European Union, they may not, but if they do, it's a very, very big problem because it opens up the possibility of Catalonia seceding. And then if they leave, the whole fabric of Europe could unravel. So it's a very serious problem for the European Union and the Eurozone.
Listen, Mike, Brexit is a much, much bigger issue than Grexit. Britain is the second largest economy in the European Union. It's much bigger problem than Greece's, which is only a couple of % of GDP. And if they decide to leave, it's going to send shockwaves through the region. Everybody we talk to on the economic side says it's a disaster if they decide to make that decision, but the population seems to be really willing to do it. So the unknown political risk here is going to put the currency very much at risk.
Yeah, that's exactly what our research has been showing. And it's interesting, we've had Angela Merkel here trying to stand in the middle and hold this whole thing together, but she's really losing a lot of the support and the power that she had before, isn't she?
She is, and this is also an important story because in 2016, we will all be focusing on 2 key elections that are happening in the Eurozone in 2017. Of course, in 2016, we'll be caring about the U.S. elections as well. But for the Eurozone, both Germany and France, and those are the 2 largest economies in the Eurozone, are up for elections. And Merkel's losing her power and her support, and that could mean that her policies could turn more inward than outward, which is actually very negative for Eurozone growth and German growth.
Absolutely.
You know, Merkel is a really interesting figure because she sort of comes from the conservative part of Germany, which is generally Eurosceptical at all. They sort of really don't like the whole idea of Euro to start with. And she has been one of the great unifying forces for it. I mean, she's sort of been the great proponent of the whole Euro unification project. Mm-hmm. And the fact that she could lose her power could really, really put the currency under threat because she's been its greatest advocate. And if she goes, maybe that big advocacy goes with it.
Yeah, the center really can't hold here.
Yes, the center can't hold.
Now, the unfortunate threat that we have to take as a reality for all of us, and particularly in Europe, is ISIS and terrorism. It seems like what happened in Paris and what's potentially could happen down the road is a major issue. So I was wondering if you could talk a little bit about that.
So ISIS is a very serious threat. We had, attacks in 2015. In the early part of 2016, it seems as if they shifted the focus down to Indonesia and Turkey. But it's very, very realistic that another major European city could come under attack this year. So we believe that Europe is facing its greatest threat since World War II. 2 times last year, terrorists successfully hit Paris. And according to German police chief, thousands of ISIS radicals are entering Europe and planning more attacks. So if ISIS is losing ground in the Middle East, they have basically made Europe their target. And the terrorist organization already made it clear that they are smuggling thousands of extremists amidst the flow of refugees, putting Europe in the incredibly difficult position as it tries to balance humanitarian values against security needs. On one hand, they had the largest refugee crisis of our generation, and on the other, they face the greatest threat to the world since 9/11. It's a very difficult position to be in.
Sure.
Mike, in New Year's Eve, they had a terrible story in Cologne where many females were attacked by refugees. As a matter of fact, the story was so big that the Cologne police chief had to resign. Now, we didn't hear much about it here on this side of the Atlantic, but in Germany, it was the story, and it still remains to be the story because it shows the danger of opening up your borders to all of these strangers and increasing the incredible amount of crime that could happen as a result. In addition to which, if Kathy is right, and if, for example, ISIS did instill a couple of terrorist cells into Europe, you could have the potential for what's called the Mumbai attack, where you have multiple attackers in multiple locations causing untold havoc. That happens, that's going to put the whole continent on ice as everybody just basically brings in their horns.
Yeah, it really, this refugee crisis that we see on the news and that they're dealing with over in Germany and elsewhere in Europe is a huge story, and we all have to keep our eyes on it. If you take a shift a little bit from the geopolitics and what's going on there, and just look at the economic situation in Europe, what do you see going on there?
Well, we basically see weak to non-existing economic growth throughout the European Union. Strong states like Germany are expected to bail out these indebted states. They're now fighting for their own economic lives. And the ECB is showing reluctance to increase quantitative easing. I think they will be forced to do so if growth continues to slow. And in general, European growth has been pathetic. In the third quarter of last year, for example, the Eurozone economy expanded by a mere 0.3%, when during that same period, the US grew 2%, which is significantly higher. Productivity has always been a problem in Europe, but the population is aging, and they could face the same issues as Japan.
Got it.
Mike, one of the interesting things that people are not even appreciating is the impact of oil and China on Europe. Germany is the largest trading country in the world. It has $2 trillion worth of exports every single year. And 2 of its main markets are China and the Middle East. Both of those markets are slowing down for their own particular reasons. China is, of course, slowing down because it's just simply growth over there is going to be much weaker. Sure. But the Middle East simply has no money because with oil now below $30 a barrel, there's no way they're going to be able to buy all of those German cars and all of those German construction equipment that they've been buying for years and years. So you're going to see, as a matter of fact, we're already starting to see this in the data at the beginning of the year, a bigger slowdown in German manufacturing than anybody anticipated. And that is certainly going to lead to much slower growth as we go forward.
Yeah, absolutely. You have less wealth there in the Middle East. In Russia and Eastern Europe, you have economic slowdowns there. In Russia, a currency crisis and so on. So obviously, these are major issues for Europe from a trading perspective. I think there's also the issue, isn't there, of what they have to spend their money on. Aging population means more healthcare and things like that. But there's also the security issue we talked about earlier.
You're right, border control. European nations are spending money on tighter security measures as they are forced to implement more processing centers and border fences. And basically what that translates into is greater public spending at a time when the debt to GDP ratios in places like Belgium and Greece already exceed 100% of GDP. So they can't afford to do this now, but they have to.
So we've got the macroeconomic outlook, we've got the issue with terrorism, and we've covered the political situation in Europe and what that means. Now, can you bring it down to the level that matters most for our investors, which is what to do about it? How can you build your wealth in this situation as we've described?
Well, our research predicts or suggests that the euro could drop to as little as 90 cents to the dollar. So we think the best trade in 2016 is going to be short the euro-dollar currency.
Short the euro, okay.
Yes. For example, right now, you could buy an investment designed to soar as the euro plunges against the dollar for as little as $108 plus commissions. And if the euro does fall to 90 cents, as we think it will, you could walk away with as much as 574% pre-commission profit.
And that's a great number, sure.
Or you could use a similar but more aggressive investment and have the potential to bank a gain of up to 982% when the euro plunges. Wow. And we found another position with the potential to generate a gain of up to 1,401% as the euro continues to fall. Of course, I don't need to remind you about the risk involved in any trading strategy, but just imagine that's enough to turn $10,000 invested into more than $150,000.
Wow. And a lot of people, sometimes they think first about stocks or bonds and what's going on there, but really, from what you've described, this currency market, this currency opportunity is almost the ideal way to play what's going on over there, right?
Absolutely, because currencies are the perfect instruments to express your political as well as your economic view. They're very sensitive to all these three issues: the political fragmentation, the threat of terror, and of course the economic stagnation. That's why we think the euro-dollar trade to the short side, going all the way to 90 cents, is going to be the trade of 2016.
This has been fascinating. It's remarkable how closely your views on Europe parallel my own. And it's clear that a euro-dollar trade is the best way to play it. And I especially love the fact that you could play it safer with the inverse ETF on the euro, or you could go all out with an options trade capable of delivering gains of up to 1,401%. For those of you who want to follow these kinds of trades with Kathy and Boris's buy and sell signals, be sure to click the button below this screen. It will take you to a page with details on how you can have our guests' trading signals delivered directly to your inbox. Boris, Kathy, thank you very much for your insights today.
Thanks, Mike. It was so much fun being here.
It's our pleasure.
This is Mike Larson for Weiss Research. Thank you for watching.